Hey there, Wall Street winners. It is Thursday, July the 11th, and we're a little late this morning. We don't have a pre-market update. We have a midday update. It is just after 11 a.m. And as we look through the major indices, you can see that the S&P 500 is in the red, 31, almost 32 points. The Dow is up almost 84 points. Crude has been bouncing around. It started up, it came down. It's now up 37 cents. So it's above 82. It's close to 82 and a half on crude futures. And then we have the NASDAQ, which is having one of its worst days of the week, and it's down 230 points, but I think we're going to see it bottom pretty shortly and then turn around. And the VIX is still under 13. And so big news of the day was CPI data. So this helps with the Fed to determine the direction that inflation is going. And we've come to learn that the numbers came in better than expected, which shows that inflation is coming down. And that's a good sign. It's also a bad sign. So we have to look at this from different perspectives or through different lenses. If inflation comes down, things are more affordable, and that's obviously a good thing to the consumer. And that could allow the Fed to lower interest rates. So there's now a greater than 70% chance that the Fed in the US will reduce interest rates in their September meeting. But what that also means is that the economy is slowing, and we've seen jobless claims increase. We've seen new jobs decrease. So it is showing signs that the economy is slowing. Now, it's not slowing to the extent that we're seeing major layoffs and a lot of losses of jobs, but we're starting to see a little bit of activity. We'll call it in a return to normal, maybe, because everything flipped upside down after COVID with all the supply chain issues and all of the outcomes around that. So if we take this information and we apply it to what'll be interesting tomorrow is the news around financials. So tomorrow, a number of the big banks announce, and when interest rates go down, one of their primary sources of income is net interest income. It's the spread between what they pay out on money given to them by customers and what they charge borrowers. And as the interest rate goes down, that spread narrows, which means a drop in profit. Now, at the last quarterly announcement for JP Morgan, last quarter, they announced they projected better than expected by, I think, $2 billion, better than expected net interest income for the year. Now, they're smart people, by all means. So they have likely factored in at least one, maybe two rate cuts. So that may not affect them going forward. So the interesting thing with JP Morgan's announcement tomorrow will not be their current quarter or last quarter earnings and revenue as much as it will be their future forecast. And if they remain on trend, on target for that additional $2 billion in net interest income, and we see a pickup in investment banking, it's very likely that is going to bode well for that stock. And boding well for that stock, it should lift a lot of the other banking stocks and investment banking stocks in particular. So we'll see next week, early in the week, Morgan Stanley, Goldman Sachs announce, and then we'll start hearing from a plethora of others, both small, regional, and larger. We will hear from Citibank tomorrow. We're going to hear in coming days, Bank of America, Wells Fargo's tomorrow. So there are a lot of announcements, and it'll be worth listening to not only their earnings and revenue, but their future forecasts and how these may have shifted now that we are more likely, much more likely to see a small, not a significant, but a small interest rate cut coming in the September timeframe. So where am I looking at today? Well, if we look at SoFi, if you've been listening to my thoughts on this, you have done very, very well this week. This was a stock that was down in the 6 20s, as low as 618 on Tuesday of this week. It is now up in the 680s, and it touched 690, got up to 694 today in the morning session. So that's a stock that you had the ability to make at least 60, maybe 70 cents on, depending on your entry and exit points. But even if you round down to 50 cents, that's greater than a 5% gain. So that is a phenomenal gain in a single week, and that's one of our winning picks. I am a little concerned about the price of JP Morgan today, but if you do look at the 6-month chart, what you'll notice is that this stock did get up to levels around $200, and then it did spike at earnings previously, got up, I think it was into the 208, 209, maybe even 210 levels, and then it did drop after earnings. Came out, and now it's climbed back up, and it is near record highs for the 6-month. If you look at the 1 year, also near record highs for the year. So buying into a stock at record highs, it's not necessarily a bad thing, but it is a little risky if they miss expectations. So I am on the fence as to whether to take a small position in JP Morgan today, because I do view it as quite risky, and I have to question whether if they do, and Jamie Dimon from JP Morgan, the CEO, fabulous man, smart man, brilliant, in fact, man, and really seen as a visionary on Wall Street. Huge, very long tenure on Wall Street, and tenure in his position as well as CEO. But he often comes out and says things that cause a little bit of angst and anxiety amongst analysts in the market. And I don't know why he does that. It's almost a bit of self-sabotage to the company, in my opinion. And that causes the stock to go down. So I believe this stock is going to dive tomorrow. It may rebound, but I do believe after earnings, the stock will come down tomorrow due to something that Jamie Dimon says on the earnings call. We'll have to wait and see, but that's what my thinking is there. If it goes up, it should pull up Morgan Stanley. It should pull up Goldman. Both of those should have good earnings, but again, Goldman's at 482. If you look at the year, it's way up for the year, up 50% on an annualized basis. That's a lot of growth for a financial services company, and we really aren't seeing the level of activity in investment banking that I think we need to see to justify that, but maybe other trading income and revenue will help to support that. Let's leave financials for a second and talk about our tech sector. So one stock that's getting beat up today that is a long-term, very good stock is NVIDIA. It's obviously done extremely well. And it's getting beat up a little bit with the overall index being off about 210 points as we speak right now. That's the NASDAQ index. Other big names like Alphabet or Google are down as well. Still expensive, don't get me wrong. Meta's dropped. So Meta was 540 in the last 2 weeks. It's now down to 521. Again, this is a stock that has a big trading envelope, and this could be an interesting buying opportunity, but I do expect it'll go down into the low 500s or high 490s as we move through earnings season and before they announce results. Some others that are positive for the day, Workday is doing pretty well. AMD is off, so another semi that's off. OnSemi is off. ARM is off $5 down to 181, still way overpriced in my opinion. One stock worth looking at today is Microsoft, down $11. This is a stock that should continue to trend upwards, and if it's not at 500 by the end of the year, I would be very surprised. So that could be a nice 10% gain. And then look at some of the cybersecurity stocks. So if we look at CrowdStrike had a horrible day yesterday, but it opened very positive. So if you had a bought in yesterday and then taken your profits, which I did at the open, you could have sold out in the 389 range. It peaked up around 389, and now it's back down to 374. Sorry, 379, not 389. It was up at 379, and then has now fallen subsequently down to 374. I think this could break down to 372, even possibly 370 based on how the NASDAQ is continuing to fall. Now, if the NASDAQ starts to turn and starts to recover, I think this could be an interesting opportunity for it to get back up to 379, and that would be potentially $5 gain there. So that's one that I'm keeping my mind on. I've been in and out of that a couple of times today. The other one is the transport stocks. So this was a call made earlier this week, JB Hunt. JB Hunt was down at 155. If we look at the 5-day chart on this, this is insane. It was actually down at 154, but call it 155 because it was the high 154s. And look at this, 164. That's a $10 gain in just 2 days. So I took out about 5%, maybe 6% of that this week. And that was a fabulous trade to trade on the envelope. If you break this out amongst the 1 month chart, you'll see that we bought on the dip, which is buying low, and then we sold as it climbed higher. As it dipped again, we bought in and then sold again as it climbed higher after that. Now we're at a point where it's likely going to come off this high. So if you're into shorting stocks, this would be a great stock to short. And I don't want to be holding this stock over the earnings period. It had bad earnings last quarter. Oil really hasn't changed in price this quarter, and we're not seeing huge demand in the consumer sector. So that's telling me that we're probably going to be a little light on transportation services, or not in a growth mode there. They're obviously servicing clients that have recurring contracts, and for maybe goods that have a time expiration on them, like food, that need to get delivered on a constant basis. But I'm concerned that consumer goods deliveries and shipments may be down slightly, and we may see another round of bad results coming out of JB Hunt. So I'm going to wait to buy this when we see the results, especially if those results are not good, and then wait for a bit of a dead cat bounce to make a small percentage return there. And then we've got your healthcare and retail. Again, not a sector that I'm loving at the moment, but if I was to buy something for a 1 or 2 year hold, I would buy Lululemon right now. I think at $291, that's a super attractive price for that company. And based on its leadership as a brand and what it is doing in the marketplace, I think it still has a huge amount of potential. Even though we're back to work in a lot of cases, leisure wear is not the only thing that people are wearing any longer on a daily basis, but it still is quite popular, and it's hard to change a trend quickly. So I still think that that brand and that stock has a lot of upside potential, at least to get back to, say, 350 to 380 by this time next year. And that could be easily a $100 gain on that stock, which is about a 33% return if it does that. So I would be a long-term buyer of that if I just wanted to buy something and sit on it and hold it. That's where we are today. I hope you've enjoyed this update.